Welcome to the Alberta Prosperity Project Podcast. If you're ready to listen, sit back, relax, and enjoy the show. Thursday, September 22nd, 2022. Welcome to episode 19 of the Alberta Prosperity Project Podcast. I'm your host, Hunter, today, joined today with Tanner, who is again back in Lloyd. Tanner, how are you?
I'm back in Lloyd. I'm doing great. I'm enjoying the last little bit of warm weather before the cold decides to hammer us all with, the nationwide frost. So that's, a little discouraging. But on the whole, I'm doing phenomenal just because the weather is so nice today. And you? How are you?
Yeah, not too bad. It looks sunny outside right now, so I can't quite complain about that. There is no snow in the 14-day forecast that I've seen so far, so we're going to hope that it stays that way until about December 24th, and then it can all melt on December 26th.
That's exactly right. That's exactly right. That's maybe the smartest thing you've ever said in the podcast.
I think. And so I think there. That's what I'm looking for. Unfortunately, I'm not going to hold my breath on that one.
No, but I wish I'd said something that smart. That was brilliant. That was pure brilliance, and that should be, that's one of the most profound quotes. Let's have snow on the 24th. It can melt on the 26th.
That's right. And
totally
we can, I'm fine if, I get that we're non-political, but if a politician comes out and says that's their platform, I might just have to vote for them. I agree. Would have to be the case.
I love to sled, I love to skidoo, I love to boondock and all those things, but now I'm at the point where if I could live in the warm all year round and then just drive an hour to get to snow and mountains, etc., that's what I do. That's what I do.
Absolutely. Well, you mentioned, obviously your love for skidooing and love for sledding in the mountains and that kind of thing. And I understand the allure of that. But for me, for the listeners that don't know, I have a huge passion for aviation. I used to have a plane poster that had to be removed. Unfortunately, a little lately once there's a little ring on my finger. But that's okay. It's all good. But I've always loved aviation and that kind of thing. So I'm actually today, first after this podcast, obviously I'm going to get my hair cut. So listeners, take it in. This is the last time I think I'm ever having this hairstyle. I won't tell them what it is. I'll make them wait till next week to see. But it is going to be something different. So we'll see how that goes. I might have to have a hat on next week. I don't know. We'll see if it works. But following that, I'm actually going to complete my aviation medical to get my pilot's license. So that has been a big, exciting thing for me. If there are any listeners out there that are into aviation, I am for sure, I guess you could say biased towards getting a Gulfstream G700. Current price tag is only $78 million though. So if a few listeners want to donate and let me know if we want to do a partner program on buying that plane, I'd be happy to fly people around. I'd be happy to have it just as my nice little hobby plane. But it might be a little on the pricey side for a hobby plane. I'm not too sure. What do you? I think I sent you pictures of it. Did I not?
Yeah. Oh, it's cool. It's a cool looking plane. I think you're quite correct that if anyone has is interested in donating. To the fund, to the 100-day fund, just for a plane, something not too posh, but just posh enough.
Of course, I could be, I'm not being extravagant and buying a Airbus for $200 million. I'm trying to stay and live within the means of a free and prosperous Alberta, and so that's obviously what we're looking for. But the reason why I even bring up the plane thing a little bit as well is a big news recently just came out. That ArriveCan and restrictions are expected to drop and ArriveCan become optional. So I guess just getting right into the podcast itself, if you don't mind me asking, what do you think is the reason for this sudden change in government policy regarding the restrictions in ArriveCan?
Yeah, that's a good question. Well, we've heard that they're following the science. They're following the science. You and I and all the listeners and APP and, millions of Canadians and people around the world discovered it was political science. They're following political science and the science of power and popularity and so on. Mm-hmm. And with, you have the trending hashtag Trudeau must go. You have national outrage over this app, this ArriveCan app, and these airport restrictions, these airline restrictions. You have literal celebrities and former athletes, maybe athletes now, commenting on the disgraceful state of the airports in the country and how slow and backed up they are. And so eventually the political pressure just seemed to mount to a point where not even the mighty federal government can ignore it any longer, and reality's hitting them in the face. Now, it might be that it's certainly a political move. It might be that an election's coming. I don't know. That's if I could tell the future, I'd be rich, but I can't. And so maybe this is just a play to try and capture more votes. Who knows? I don't know. At any rate, I'm glad it's gone, at least for the moment. It should be permanently, you couldn't find a word strong enough. Permanently eradicated, right? Like totally decimated, destroyed, incinerated is maybe a good word. But for the present, we're happy it's gone.
Yeah, absolutely. And I mean, even the tourism industry itself has been calling for an end to all this. Obviously, myself being very interested in that field as well. It's been, the airlines have been calling for an end. There's New York Democrat governors calling for an end to the app, saying that their tourism industry has been hurt by it. But there is something else going on within the world right now, I think, that might hurt even more than what's been hurt by the tourism sector, and that is the entire market as a whole. Obviously, you know, the last number of podcasts that we've done, a few of them we've touched on the idea of a market crash and the idea of a housing crash and the housing bubble and all that kind of thing. But I guess my question now is, things keep on progressing over and over. Perhaps you can get into a few of the signs, but is there a market crash coming, or is that way in the future for now?
Right, that's the big question. Well, I often say that I prefer to prophesy after the event has already occurred, and I'll probably keep it that in this situation. And I know you'd probably agree, and I'm sure most of the listeners and certainly traders would agree, because again, if you could tell the future, you'd be rich and you'd know when to buy and when to sell and what to buy and what to sell and so on. But we don't, and so it's impossible to. You can't make these. You can't. It's impossible to totally accurately predict the market in the future, right? So is the market going to crash? Well, first we should say that, right, as a nonprofit, we're not a financial institution, and so we can't solicit or give financial advice, legal financial advice. These are just merely our opinions, and we're going to try and present to the listener or the listeners the facts of what's occurring right now in the world, specifically in America, because that's still the superpower, even though that power seems to be decreasing day by day. And see if it might force some contemplation about what's happening. So is the market going to crash? Well, the historical data indicates, there's going to, I mean, people are arguing if we're in a recession right now or not already, et cetera, et cetera. I take the position that we are, certainly America, I would say. But that's a different story. Is it going to be this big, massive 2008-ish crash? That's the question. And so, although I can't accurately predict it, I can't say definitively just because it's impossible to do so, we can give information and data that might give the listener and the viewer some options to think about and to wonder about.
Right. Yeah, absolutely. And I mean, obviously, you're saying about the prophecy and that kind of thing. I always preferred, in business school, they often said, look, weather people can't forecast the weather. How do you think you're going to forecast an entire market? And I think that they're usually right. I mean, weather people especially seem to be wrong most of the time. So even though it says no snow, I'm not holding my breath on that. But I guess to start with, do you maybe just want to touch a little bit on the looming interest rate hike coming from America now? Looks like it's going to be 0.75%. What exactly that might look like for the market as a whole, if that's going to, increase instability, or if that's going to actually help stability, what's it going to look like? Right, sure.
Well, so we're recording this just before the announcement's coming, just as a consequence of our schedules. And I'm off to Calgary tomorrow to speak, which would be a lot of fun. So we have to do it before the rate hike. But it sounds like at the time of this recording that the Federal Reserve is going to increase interest rates, right, by 75 basis points?
Yeah.
Right. So three-quarters of a percent. Yeah. Again, which is, I think, what would be the third or fourth time. I think it's the third time that they're doing that consecutively. So the interest rates continue to rise in an effort, right, of course, they say, to combat inflation. Now, we've already, in the podcast previously, or in yesterday's little mini short episode we demonstrated that high interest rates and high inflation actually often coexist together. High interest rates don't necessarily mean low inflation, right? That's a fallacy basically as old as markets themselves, that if you have high interest rates, you have tight money, you have low inflation. But a study of the present shows that isn't necessarily true. So even though they're saying it's there to combat inflation, I think it's a dubious proposition at best, especially when those interest rates will affect the asset prices, right? Insofar as it's becoming already much more difficult to borrow, and it's becoming much more difficult to sustain the borrowing. So as Canadians know, who have taken out a variable rate on their mortgages, as the interest rate climbs, even less than 1%, even not even, but less than 1%, even if it climbs 0.75%, they immediately feel a serious pinch that's actually beginning to hurt a lot. And it's going to continue to get worse because, mortgages are big sums of money. And so even a percentage increase in a rate hike is significant, right? It's a big chunk of money. And the same is true in America, right? As the interest rates continue to rise, right, you'll see more and more individual Americans be pinched by rising interest rates, and they've taken out this debt, and now they're trying to pay this debt and pay the interest on it, and it's hard, it's difficult, and so. Well, it's not going to to help Americans is what I would say. It's going to hurt them, just like it's hurting Canadians. Now, you and I were talking about before this about the yield curve, right? Mm-hmm. This is kind of, you probably know more about it than I do because you're more into the stocks and so on than I am. But I always found the yield curve and this sort of monetary economic policy rather confusing. It's just a consequence of the way it works, or the way that it's designed. But to me, it seems like it's set up like this. And I'll try and explain it as easily as I can, and help me out if you're able to. So suppose that you want some money from me, right? Let's say you want some money from me. Let's say it's $100. Okay. Yeah. Now, you can either say I'll pay you back in 3 months, yeah, or you can say if you give me $100, I'll pay you back in 10 years. Yeah. So, if I agree to the 3-month agreement, the interest that you'll pay me will be less than the interest it will be in 10 years, yeah, right? Yeah. That is, it's easier, I would say, to get paid back sooner. You can explain it like this. So, suppose that you said, right, you need $100, and you'll pay me back the $100 with whatever interest rate the bank is paying. So let's just say it's 1%. Right. So if right now it's 1%, I think I'll get $100 plus 1% back in 3 months. Okay. Mm-hmm. Or if I want to bet and think that the interest rate's going to rise to like 20%, who knows, in 10 years, then I'll say, I'll do the 10-year deal. Now, the way that the curve works is that the longer the time series, right, the longer the time frame, the higher the interest rate. So from 3 months to 6 months, the interest rate should be higher at 6 months. And then from 6 months to a year, whatever it is, it should be higher at a year. And then to 2 years or 3 years or 10 years, whatever it is, the curve should continue to go up, right? The interest rate should continue to increase. And because it's riskier to invest longer. You don't know what the interest rates are going to be. You have a depreciating dollar. And so you have to have a higher interest rate to recuperate the investment on that dollar, right? There's all these factors that go into the fact that all the audience needs to know is that the longer the investment, right, the longer the investment, the higher the interest rate. That's what's normal. Okay. Yep. But what's happening right now isn't normal, right? What's happening right now, and can you put the graph up on the screen, that time series graph? Yeah, that's a good graph. So what's happening right now is that the interest rate, the price on 3 month, they're bonds, but 3-month investments versus 10-year investments are inverting. Right, this is it's when the yield curve inverts. And all it means is that the interest rate on the short-term investments are higher than they are on the long-term ones. And that's not normal. Now, the reason we take so much interest in this is because the yield curve has been the most accurate predictor of recession and depression, since ever. Whenever that short-term interest rate is higher than the long-term one, whenever it crosses over, right, whenever it eclipses the long-term interest rate, as we're showing on the screen, you can see it's an indicator of recession. The gray bars on the screen, those gray vertical bars, are a period of recession. If you look right before them, you'll see that the red curves and the green lines, they switch, and one gets higher than the other. And so if that happens now, which it seems like it's going to happen now, then it's a good indicator of a recession, or that a recession is like one that you can't deny is coming. So I know that's confusing, but honestly, really what the listeners need to know is the interest rate on long-term investments should be higher than short-term ones. Right now it's approaching that. It won't be like that. Short-term ones will be higher than long-term ones. That's not normal, and it's a very good indicator that a recession is coming soon.
Right. Yeah, absolutely. And I mean, just onto that as well, I'll maybe put this one other graph up as well as you're talking about this next point. But do you maybe really want to just quickly touch on put options and call options and the extreme differential of how much they're trading at right now and what that might mean as well for a market?
Right. So last week, the institutional traders bought $8.1 billion of put options. Now, you can just as well say that means that $8.1 billion of put options were sold. So you have to be careful with the graph. And again, I'm no expert on this stuff. I'm not a trader. That's a gift. Guys who can trade and know all those financial terms are brilliant. But as far as I understand it, it means this. A put option is when you have a stock and you're concerned, or a share, and you're concerned that your share is going to drop in price.
Yeah.
Now, you're considering selling your share, but you don't want to sell it at a low price. So what you do is you buy a put option, and that put option allows you to sell your share at some predetermined price. I think they call it the strike price, right?
Yeah.
Before, or at any time, if it's an American style put option, in the next, 90 days or something? I guess it varies, right?
Depends on terms of the agreement, but yeah.
Okay,
yeah.
Sure. So, suppose that I have an investment. Suppose that I have a share of, let's suppose Hunter starts a business flying people around, a charter plane. And so I have a share in Hunter's charter service. And right now the share is trading for $100 a share. It's a very expensive company. Well, I don't know if that's expensive, but anyways, it's trading at $100 a share. Yeah. But there have been rumors that Hunter flies erratically, and people are nervous. They don't like flying with him. And so I'm considering selling my shares, but I'm worried that in a week the shares are only going to be worth $80 or something like that. So what I do is I buy a put option. And that means that even if the shares fall to $80 next week, I can still sell it for $100. It's a guarantee to sell it at that price. And so it's a hedge against falling share prices, right? Against a crash.
Sure.
Now,
Sure.
So that's what's happening now, and there's an abnormally large number of put options that are being sold. Again, you can just as easily say that there are an abnormally large number of put options being sold, meaning that a whole bunch of people also think that the market's not going to crash, but it's going to get better, right? They're betting that actually the price is going to rise, and there's going to be no issue. And so that doesn't conclusively or definitively state that a crash is coming, but it's just something to watch for and to look out for. Just because it's not normal, right? It's just a very, very large number of put options that are being sold, that were sold last week, in comparison with the number of calls that were sold. And so something just seems a little amiss. That's what I'd say.
Yeah.
Something seems amiss.
Yeah, absolutely. And that's a great way of putting it, just kind of these people trying to hedge their bet. And so obviously there's going to be winners and losers on this end of the deal. So I guess only time will tell us exactly who that is, and then we can prophesy about who was right, and we'll figure that out. And so
no, exactly. And like you can look at can even look at the housing market too, right?
Yeah.
Like that's so what I've heard is it's cooling, right? Like that's cooling as well.
Yeah.
But again, housing doesn't crash like stocks do. Right, housing is more like a bubble of air that just slowly leaks out until one day you wake up and you realize that it's not worth anything, right? And then if that happens, and who knows? Mm-hmm. But if it does happen, that will really be disastrous, right? Because here's what you have is you have individuals. Now I know you don't have a mortgage, but say you had a mortgage, right? Yeah. Let's say you have a mortgage on a $700,000 house, right? Yeah. So the mortgage broker goes to the bank, right? Accepts the mortgage. Mm-hmm. The mortgage broker gets a cut. Great. The bank, all that, they make money, et cetera. Great.
Yeah.
But then if the housing market starts to crash, and this is oversimplified, if it does crash, eventually you realize that your house is only worth $400,000. Mm-hmm. Well, why are you paying a mortgage for $700,000 if your house is worth $400,000?
Yeah.
It's foolish. And so what do? You just walk away. You forsake the house, right? You just get your, they had this, I've heard of this in the 80s. Mm-hmm. Like Dad was living in Lloyd in the 80s, right? Where guys would just take their keys, the house keys, and put them in the mailbox and walk away, right? Yeah. It would be the same thing here, where if the housing market dropped that substantially, you would see people just take their keys, and just put them in the mailbox and walk away. Well, okay. Yeah. So then the bank would try and sell the house, right? Or whoever, and they'd realize that no one wants the house, and you can't recuperate your investment. And then as that multiplies, right, it gets larger and larger and larger. And of course, you have this massive crash. So again, who knows, right? It's impossible to definitively state, yes, this is going to happen. That's the bane of the economist. That's the way he always sounds. But anyways, it's certainly something to watch for. And as interest rates continue to rise, and if people begin to default more and more, right? If the interest rates become too much to handle, especially when they have those massive mortgages and relatively stagnant wages that are that are not sufficient to cover the cost of the mortgage, then we'll see what happens. Coupled with the interest rates, coupled with the yield curves, coupled with, the stocks and so on. Yeah.
Yeah. Absolutely. And one more thing here before we conclude. I'm not sure if other listeners are like myself, and every single time that they open their stock app lately, they just get more and more sad, so they just stop doing it. I'm thinking about deleting the app from my phone, to be honest with you. That's how frustrating it can get. But I guess if the crash isn't here yet, and if a crash is coming perhaps, what can be done for individuals to protect themselves who are listening to the podcast? Like, is there something different that they should be doing? Is there something that can be done? What's the best way out of this mess?
That's another good question. Well, again, just because, again, I'm not a financial advisor, and I'm looking for the same advice just like all the listeners are. Honestly, my piece of advice, although it's not much, is honestly to find a financial advisor who actually knows what's going on and who isn't trying to just sell you things, but instead is actually trying to give you advice and recognizes that, government's printed so much money, you have high inflation, you have all of these problems that they know exist, and they're not trying to sell you something that says everything's great, because things aren't great right now, right? Like the market isn't what it's supposed to be. It's lots of it's a deception, lots of it's not true. And so I would say look for that, and then follow their advice, because they're much smarter than I am. So
yeah. Absolutely. Well, there we go. Well, with that said, if the listeners want to check out my haircut next week, be sure to subscribe to the podcast so you don't miss any future episodes. Be sure to follow us on social media. We're at Alberta Prosperity Project. It's there that we make posts about what's going on within the events. Obviously, Tanner, you're across the province yet again this weekend, so you're looking forward to that, as I'm sure the listeners can tell. With that said, though, if you want to get involved or volunteer, get yourself a membership. They start at $20. That's what keeps this podcast and this project going. We need everyone on board to help us get the leverage that we're seeking. And so we're so excited to see what the future has in store for this great province of Alberta. But with that said, Tanner, enjoy the rest of your day, have fun in your travels, and we will see the listeners next week.